Good morning. After rising for 6 days on a trot, many investors are wondering if the Indian markets are ready to break out of its previous highs. A number of large Sensex constituents are looking strong, which gives an indication that the Indian markets are ready for the next up move if the global scenario does not give any new surprises. Indian markets are likely to consolidate in a sideways fashion in the wake of an extremely muted session in Wall Street. The trend in Asia is mixed. The Nikkei is down while Hong Kong and Shanghai stocks are up as they resumed trading after a holiday. Although the US markets have been on a strong uptrend in the past week, weak housing data released yesterday has brought back some uneasiness regarding the sustainability of the economic recovery. A number of Wall Street majors have also given a cautious guidance over corporate profit growth. But we still believe that US is in a much better position than Europe, although the recovery might not come as quickly as we had expected. Relatively, markets in Europe managed slim gains amid optimism that the debt-strapped nations in the regions are tackling the crisis well. But stocks in Spain declined on reports that it was seeking bailout money. The IMF and the government in Madrid have declined any such plans. The euro is stable around $1.22 while crude is hovering around $77. Though there has been some relief over the sovereign debt situation in the eurozone, the problem is far from over. It may drag on for many more months. Keep that in mind before taking any large bets. Back home, the monsoon picture seems to be pretty much good as of now. Hopefully, it will be able to soothe a few frayed nerves after the recent spike in inflation. Reliance Group stocks, particularly the ADAG ones, may remain in the limelight amid relentless news flow. Meanwhile, RIL may see some action ahead of its AGM in Mumbai tomorrow. FIIs were net buyers of Rs 7.84 billion in the cash segment on Wednesday on a provisional basis, according to figures published on the NSE website. The local institutions were net sellers of Rs 1.71 billion on the same day. In the F&O segment, the foreign funds were net buyers of Rs 17.44 billion. The other news for the day is Reliance Industries plans to build large power plants in India. Reliance Capital picks up 18% stake in Bloomberg UTV. TCS has won a multi-year outsourcing deal from Telenor Norway. Orient Paper will be restarting its 1 MTPA paper plant in Madhya Pradesh. RBI to buy back government bonds up to Rs 200 billion. Telecom companies to invest $40 billion this year to develop 3G BWA networks. Moving on to the recommendations, the derivative strategies are short M&M June future in the range of Rs 633 to Rs 634 for a target price of Rs 613 and a stop loss is to be placed at Rs 643. And long Voltas June future in the range of Rs 184 to Rs 185 for a target price of Rs 195 and a stop loss is to be placed at Rs 180. The technical calls are a buy on Colgate Palmolive. Traders are recommended to buy the stock at current levels of Rs 830 to Rs 836 with a stop loss at Rs 810 for a target of Rs 860. And a buy on Glenmark Pharmaceuticals. Traders are recommended to buy the stock above levels of Rs 272 with stop loss of Rs 265 for a target of Rs 288. Thank you and have a great day ahead.